We are now beginning with the inaugural session. May I now request the inaugural speakers to please join us on stage, starting with Ms. Rachna Jindal, Regional Director, CII Northern Region. May I now request Ms. Rachna Jindal to please deliver the welcome remarks.
Good morning and a very, very warm welcome to all present here. It gives me an immense pleasure to welcome you all at the 21st edition of CII Realty, one of the most enduring and influential platforms shaping the discourse around the future of Indian real estates. It's a gathering of visionaries, developers, policymakers, investors, and thought leaders who are redefining how India builds, lives, and grows. Today's theme, Real Estate in Amrit Kaal, Building India's Growth Corridors for Vision 2047, resonates deeply with the country's development trajectory. As India moves steadily towards becoming a developed nation by 2047, the real estate sector is poised to play a defining role, not merely as a contributor to GDP or employment, but as a driver of quality of life, sustainability, and inclusivity. At CII, we have always believed that nation building is a collective effort, one where industry, government, and society move in unity. CII's Northern Region has been at the forefront of enabling this transformation across diverse sectors, from manufacturing infrastructure, logistics, and mobility to real estate sustainability.
Thank you, Rachna ma'am. May I now request Mr. Ashwinder R. Singh to please set the context for the conference.
Good morning everyone. You know, there are moments in history when a nation must rise and answer its destiny, when time stops being an observer and becomes a summon. India today stands at that moment today. Between the greatness of her past and the brilliance of her future, the dreamers, the builders, the creators of her space do not today stand as spectators but are the architects of this nation. Real estate at Amrit Kaal, building India's growth corridor for Vision 2047. Today our industry size is, some reports say $300 billion, some reports say $400 billion, some reports say $482 billion. However, we are very clear that the industry is going to be a $1 trillion by 2030. Two things that have made the industry grow are urbanization and focus on infrastructure. Today, real estate contributes 7% of the GDP, which is going to be 13% by 2030, and it is also the second highest employer with almost 5 crore people working in the real estate sector.
Thank you, Chairman. May I now request Mr. Akshay Sethi, Managing Director, Stellar Group of Companies, to please deliver his address.
Good morning, everyone. Good morning to all the delegates who have come here today. You know, when India will celebrate its 100th year of independence, it'll be celebrated not in terms of the trillions of dollars of GDP or the thousands and kilometers of expressway that hopefully we would have built. I hope it will be built based on the quality of life we have provided the people who are living in the 100th year of its independence. Today's agenda, CII has curated really deep dive into across the various things that are going to be required, including financing of the real estate sector. I mean, I truly believe we've been privately held because I think, you cannot deliver a quarterly performance in real estate. How can we get land funding back in the conversation? Why are you making it so expensive for us to build with a pure equity cost? So we need these sort of decisions to be made soon, honestly, if we want to talk about the sort of scale that we're talking about for 2047. And friends, I just want to close by saying we're gathered here together to learn from each other. And so with the amazing agenda that CII has curated, I hope that you will all come out with better peer learnings and more partnerships.
Thank you, Mr. Sethi. We are now going to release the CII Collier's knowledge paper on building India's future growth corridors. May I now request the guest of honor to please do the honors along with the dignitaries on the dais. May I now request the guest of honor, Ms. Harleen Kaur, Deputy Secretary, Ministry of Road, Transport and Highways, Government of India, to please deliver the address to the delegates. Please, ma'am, the stage is all yours.
Good morning to all. It is a privilege to be here today at 21st edition of CII Flagship Real Estate Conference Reality 2025. I've closely worked in urban governance and I'm presently working with Ministry of Road Transport and Highways. India today stands at a very defining moment in its developmental journey. As we enter the Amrit Kaal, we are witnessing the vast infrastructural expansion, transformational reforms, and related interventions to build a sustainable, globally competitive, future-ready India by 2047. In this journey, real estate and infrastructure sectors stand right at the core. As India marches towards becoming multi-trillion-dollar economy, the demand for world-class urban centers, integrated logistic hubs, industrial corridors, and resilient mobility system continues to grow exponentially. It is only understandable that in the era of information, it is the aspiration of every citizen that is creating the demand. And that demand is for the quality life. It is not difficult to deduce that real estate and infrastructure sectors will shape the urban revolution in the present and future times.
Thank you so much, ma'am. May I now request the conference chairman, Mr. Ashwinder Singh, to please felicitate the guest of honor, Ms. Harleen Kaur. Thank you so much to all the speakers on the dais. May I request you to please pose for a group photograph. Thank you so much to all the speakers. We'll be now heading to the first panel discussion, Residential Reality 2.0, Bharat Boom and Beyond. The distinguished panelists include Dr. Geeta Rathi Singh, Mr. Malana Sasalu, Mr. Mohit Arora, Mr. Sunil Parekh, Mr. Srinivasan Gopalan, Mr. Abhay Garg, Mr. Subhakar Rao Supraneni, and Mr. Jatul Anand. Over to you, Mr. Amin.
Thank you so much. And as we know, India's real estate sector itself is at a defining juncture. As what we call the Amrit Kaal, brings together policy reform, it brings together tech, it brings together capital confidence above all. The day we discussed also the pre-call that we did, I mean, my specific focus was to ask you about the Pradhan Mantri scheme, Awas Yojana, which has been a cornerstone for affordable housing. From your perspective, where has it succeeded and what structural improvements can we still make in that?
We went about doing it in such a way that there are public-private partnerships. The policy was written by the ministry, and as per the policy, there was a methodology called annuity model method, wherein as investors and executors that we invest money on construction, and the land will be provided by the government, and also government decides who should be the recipients of those housing. And also the plan was to establish a housing finance corporation apart from the unit holders who bring 10% of the money and 2.67 lakhs rupees of credit link subsidy scheme which Government of India had announced. And the money that is required, we fund it through the Housing Finance Corporation, so that the grand plan was, as a business, we exist to make profit. The profit comes from the margin on the construction and also the arbitrage that we find in the Housing Finance Corporation. So we went about doing this one, and we signed MOU with Government of Jharkhand for 40,000 units. We also signed an agreement with the Government of Andhra Pradesh. We also made a concession agreement for the first time in the country in the affordable housing sector.
Do you see AI, IoT, digital twins having the deepest impact on residential development efficiency? If you have any examples also, would be great to hear from you.
Sure. Thanks once again. So yes, we are looking at a range of technologies, what I call from pre-land to post-construction, post-launch. We are seeing we are seeing it across asset classes, not just residential. But let me use some examples. I think the underlying theme that we are seeing as far as technology and adoption is concerned is 4 objectives: cleaner, safer, faster, and cheaper. I'll repeat: cleaner, safer, faster, and cheaper. How can technology and intervention achieve at least 2 or 3 out of these 4 objectives?
From the RERA perspective, I would say that with the development of the infrastructure that has taken place across the country, and if we take into perspective the North India, it's phenomenal. The highways we're saying, the road which are penetrating inside the state. So, I mean, the entire North Indian state, if we see the major state, whether it is Uttar Pradesh, whether it is Haryana or Rajasthan or UP for that matter, all the cities are expanding, which in a way is a very pleasant change that is happening, because it is in a way going to reduce the burden upon the city of Delhi and the NCR, and it is going to ensure a very uniform development that would happen in the periphery. So with that development happening, now probably the role of RERA, that is the Real Estate Regulation and Development Act, we say, and the focus have always been on the regulation of the sector. Now the focus also have to be equally on the development of the sector as well.
So the housing finance remains the backbone, of course. How is the demand evolving in non-metro cities, the Bharat part of it?
First of all, thank you for giving me this opportunity. See, to my mind, the demand is huge. The opportunity is huge and expanding, but it is more than lending. Actually, it's not restricted to lending. When especially you talk about non-metros, tier 2, tier 3 cities, it is about exploring new markets, creating awareness, building trust, understanding people, profiles, the sources of income, the methods of how incomes are recognized, and then appraising the customers and giving loans.
So it's been few years that we've been also evaluating tech, and honestly, it's nice to read in newspapers or portals that we have adopted tech, AI, layered it, and it created some magic. It's yet to happen. I've spent some time, last 3-4 years on this. Yet to happen. In fact, when we started evaluating tech, we first said, what is the tech we are using? Surprisingly, the biggest tech real estate industry was using was Excel. Right? Excel, WhatsApp, maybe Teams or Slack, right? Max. And I said, okay, there's a long way to go. And it's not easy. I may give you a crore check or a 2 crore check saying, go deploy tech, you can't. You'll be confused what to do. There's so many options available, so many claims available, but how many proof of concepts, how many pilots have been successful? Slowly, gradually happening.
So I'll leave us with 4, the same digit, but in a different context: 5, 5, 5, and 5. Next 5 years, 500 IPOs in India, 50 coming from PopTech, and 5 coming from Earth Fund. So we're going to be all billionaires in this room.
Thank you once again for taking out time and sharing your thoughts. Maybe we can have a round of applause for them.
Thank you to all the speakers, and I request you to please pose for a group photograph. I request the speakers to join us on stage. The session moderator, Mr. Gaurav Kumar. The panelists, Mr. Suresh Kumar, Mr. Manik Malik, Mr. Nishit Saran, Mr. Pradeep Misra, Mr. Asim Kohli, Mr. Bhavin Jain, Mr. Manish Agarwal, and Mr. Salil Kumar.
When you come to India, do you see an increasing depth, especially on the debt market side? Right? I think on the equity side, we have a lot of depth now with 5-6 REITs and pure private equity investors, development core, there's so much there. But on the debt side, there's still a fair degree of shallowness.
Biggest thing which foreign investors face when they invest in India
is the concept of relative value. So, we are global funds and we generally have, benchmark rates of what similar risk categorized deals would earn in, say, a North American geography. And if we translate that to India, then obviously the pipeline in India becomes quite shallow for people like us, and then that essentially means that we can, do only select deals with good operators and look at some special situations or maybe some performing credit or growth capital which, justifies the cost at both ends.
Currently, real estate has come out of a very bad recession. And, if you look at it, the growth during the 14 to 21 cycle was very painful for all real estate developers as well as all the foreign funds. So, and then 22 we start seeing the bull run. So it's like reverse of supply being more than demand, and now the supply is getting gradually eroded.
I think one of the biggest asks for our sector always have been categorization of real estate as infra, moving away from, because we believe that the risk and the capital outlay required across period is quite similar. So it's good to note that there is finally a draft framework wherein such recognitions the authorities have started to recognize. We do hope that it gets matured to also movement purely from ECB into bank side as well. But still, I think said that, we are still watching it, and largely I think we continue to raise debt through existing established structures only.
Real estate is one sector which has had its own ups and downs, and a lot of investors, some investors have had good experience and some investors have had bad experience. And a regulatory framework also keeps evolving. So I think a few transactions will need to happen, and because all these loans will be dollar denominated, and for whatever reason Indian currency has not really it has just weakened compared to the other emerging countries with the dollar. So it's not an easy answer, honestly, and right now we are also in the wait and watch mode, and we follow our group's mantra where we are never the first movers in any space. We are always the second. We always enter second, and then when we do it better than the first one. I mean, traditionally that's what HDFC has always done.
If you see 2005 wave and 2025 current, in 20 years, if you say, so property has definitely appreciated on the good A-grade city by at least 10 times compared to. I repeat my sentence, in 20 years, 10 times we have achieved by and large, whether it is Gurgaon or whether it is Noida, where large developments are coming. Now Noida, being the most sophisticated infrastructure, is definitely going to rise by leaps and bounds. So we welcome, definitely we need financing in different projects.
Industry is largely dominated by the government agencies. DDA and other housing bodies are the main organization who are supplying the properties in the market. From 2005 onward, after the national housing policy announced, the government take the back seat. It become the policy provider, handholder, and the private sector started doing the large activities, development activities.
Our strategy is very clear to our investors. We will be doing self-liquidating assets only, which means you sell, you collect cash flows, you build, you exit, and give money to the investors. So that is the cycle in which we are, and that is the mandate what we have gotten from our investors. Secondly, from a pricing perspective, see, pricing have gone down. I mean, overall, during COVID, post-COVID, whatever deals we're doing, which were in late, early teens or early 20s, they are definitely gone down by 100 bips to 200 bips point.
On an average, if you look at it, will be midway somewhere between office asset, which is 8 to 9%, between residential, which is 2 to 4%, right? in terms of getting a structured and like alternate capital, which is what generally typically like fund like as provide, that is high cost funding, and either it has to be, let's say, stacked in between, because for example hospital, right, or any managed space, the capital requirement is huge. Now in that capital requirement there is some capital which major chunk has to come from either bank. Right now, obviously, this is being replaced by customer because they are doing strata sales majorly. Whatever managed space or people are managing, everything is strata sold. So that is coming from housing capital, which is cheaper, 8-9%.
That we'll conclude our session. Thank you everyone for your time. It was lovely having everyone on board, and this is like a really big packed panel. So I don't know if we were able to get everyone to speak, but thank you so much for your time. Thank you.
Thank you to all the speakers. May I now request you to please pose for a group photograph. Over to you, Mr. Kulkarni.
Thank you very much. If we talk about luxury housing, Gurgaon is primarily the hub. Mumbai is definitely the hub. What are some of the other cities? ऐसे कौन-कौन से शहर है जहाँ पे luxury housing के लिए hubs और opportunities develop हो रहे हैं from investor point of view as well as from a realtor point of view?
देखिए, जो हमारे खास जो आज की डेट में 8 मेट्रो सिटीज़, जिसके अंदर मेट्रो सिटीज़ लाइक बेंगलोर, हैदराबाद, ये सभी पुणे, सभी मेट्रो सिटीज़ ही बन गए हैं. बॉम्बे, दिल्ली, कलकत्ता, चेन्नई तो हैं ही. इन सब के अंदर आज बहुत ह्यूज अपॉर्चुनिटी है, नॉट फॉर लग्जरी हाउसिंग ओनली, all the segment, all across the segment, even mid income housing, क्योंकि it's based on ticket size, कि आप क्या टिकट साइज लॉन्च कर रहे हैं. फॉर एग्जांपल, अगर आप हैदराबाद में हैं तो आपका टिकट साइज अगर लगभग 1 करोड़ से 1.5 करोड़ के बीच में है तो इट्स ए हॉट कैट, आप कभी भी उसे बेच सकते हैं. थोड़ा सा गुरुग्राम के अगर एरिया में आप हैं तो लगभग 2 करोड़ से 3 करोड़ का टिकट साइज ऐसा है जिसे आप यानी एनी हाउस सेल कर सकते हैं, कोई प्रॉब्लम नहीं है. एंड मुंबई तो आप जानते हैं, वो तो एक ऐसा एरिया है जहाँ पे घर मिलना थोड़ा मुश्किल काम है. तो वहाँ मुझे लगता है टिकट साइज़ थोड़ा बड़ा भी है कि आप जब 3 से 5 करोड़ रुपए के टिकट साइज़ लेकर आते हैं तो आपको एक कहीं ना कहीं अच्छा वहाँ से रिस्पॉन्स आता है. अगर आप गुरुग्राम की बात करें, क्योंकि फोकसली मेरा काम गुरुग्राम में रहा है, तो मैंने लास्ट कुछ टाइम में देखा है यहाँ पर कि ऐसे लोगों का जो देखने का तरीका है कि ब्रांडेड जो प्लेयर हैं उनसे अगर एक रिजनेबल टिकट साइज़ का घर उन्हें अगर मिलता है तो उनको अगर कुछ प्रीमियम भी देना पड़े कंपैरेटिवली जो टियर 2 डेवलपर्स हैं तो वो देना पसंद करते हैं. इस बेसिस के ऊपर जो कमिटमेंट ये डेवलपर कर रहा है, जैसा इसका ट्रैक रिकॉर्ड रहा है, जैसा इसने कमिटमेंट किया है, वो ज़रूर ये फुलफिल कर देगा.
Joining him are the panelists, Mr. Shri Vallabh Goyal, Chief Executive Officer and Whole-Time Director, Model Economic Township Limited, Reliance Industries Limited, Mr. Sumit Gera, CEO, India Business Park, Capital Land Investment Limited, Mr. Ravi Ahuja, CEO, Rice Karan, Mr. Rahul Parekh, Head of Treasury Embassy REIT, and Mr. Deepak Dureja, Founder and CEO, Propical Technologies. Over to you, Mr. Kulkarni.
I just want to ask, Deepak, what is it that you are doing in terms of Propical, if I have to ask you, what is your role in real estate in terms of a tech developer? What is the role that you're playing?
So what we do, Pranav, is we are Propical Technologies, and we come with abundance of experience into real estate development and sales and all. And we found there is a lot of potential and a gap as far as right PropTech solutions are concerned for real estate developers.
We've also seen a structural kind of a shift in the demand segments. Initially, it used to be IT park versus non-IT park type of commercial in office, if I'm allowed to talk about office right now, IT park versus non-IT park. And then there was a period when the government gave huge tax exemptions of 10 years, SEZ versus non-SEZ type of demand. And currently we are segmented ourselves as GCC, what we call global contact centers, and non-GCC type of demand.
Can you tell us more about MET? What is the concept? How is it different from SEZs or the parks that we've seen so far?
जितने भी अभी तक कंट्रीज़ हैं जो विकसित हैं
जापान, कोरिया, चाइना, सिंगापुर, इनके इसके यूएसए, इनका जब आप उठा के देखते हैं हिस्ट्री, तो इन द पीक ऑफ द ईयर they achieved between 27 to 32% share in the GDP of manufacturing. So therefore, we thought of in our prudence that manufacturing development will only lead to the industrial development and the Viksit Bharat concept.
From Capitaland perspective, I think we'll wait for Goel Saab to develop the township, and we'll make sure that it has the best IT parks in there, data centers if they allow, and also logistics warehouse facilities. So we're company headquartered in Singapore, 51% owned by Temasek. We've been in India for over 30 years, and our business is to create real assets, and our investors include private fund investors. We have a REIT listed in Singapore, and we've been contributing to developing India for the last 31 years. So I'll just keep that brief.
So I'll tell you our journey. Embassy REIT was the first REIT in the country. When we got listed, we had only 2,000 retail investors who subscribed in the IPO, because it was an unknown concept in India. And today, as we speak, we have 110,000 retail investors who participated in India, right? So for a brand new product which SEBI came out with, and all credit to SEBI in terms of promoting the product as well, right? We've gone to different cities and done roadshows along with SEBI to promote the product. So if I take the entire unique database of shareholders across all 5 REITs in the country, today it crosses about 2.5 lakh shareholders.
We have seen in the last 20 years the talk of tier 2 and 3 cities. Before 2008 financial crisis, I remember during those days in my role with Cushman and Wakefield, when we used to visit developers, they used to give us a long list of 16 cities, 16, 18 cities. They wanted to land bank, they wanted to go to all these tier 3, 4 towns. DLF had done a huge land bank valuation and got listed prior to 2008. But post that, the tier 2, 3 cities never took off the way they were supposed to. I think it's come a full circle. At the moment, the hub and spoke model is playing out.
Okay, thank you very much. I've been told to wind up the session and we conclude. Thank you very much, gentlemen, for giving us time.
Thank you so much to all the speakers. Can we have a huge round of applause? May I now request all the speakers to please pose for a group photograph? I would humbly request you again to please stay seated. We have a concluding fireside chat with the conference chairperson as well as Pranav Kulkarni.
What are the few key takeaways that you witnessed today? What are some of the things, the discussions that emerged today?
See, one of the things in the capital markets is very clear that, Asim is there. And first of all, I want to thank each and every speaker who has traveled from Mumbai, Bangalore, and participated, because this conference is only a conference because of all of you. I'm truly grateful on behalf of CII, and I want a round of applause for all of you for really participating and making this conference what it is. Thank you to you, Pranav, for moderating 3 such wonderful panels, and you've done such a fabulous job that we are very grateful on behalf of CII. So we had Republic, for example, as our media partner. We had Reality Plus as our publishing partner, both market leaders in their own sphere. So that is the credibility we bring. Coming back to your answer, yes, we need depth in the debt market. India needs to have a deeper debt market is what I could take away from all the other things that we were discussing, because that's the key point. On the housing side, it is very clear affordability is going to become a big problem over the next 4 or 5 years. The way things are, people are saying that even new people who get into jobs might not be able to buy an apartment. So multi-office is one thing that came out very well in the capital markets thing, that developers will create projects like what you have in Dubai, Golden Sands, Silver Sands. They build and then they rent, and they operate on rental yields, which means rental yields have to go up.
Wonderful.
Thanks.
Thank you very much, Mr. Singh. Thank you.